You're watching Captains of Industry here on CNBC Africa, and I'm chatting to Sisa Ngebulana, who's CEO of the Rebosis Property Fund. Thanks for your time.
Pleasure.
I want to go back to your legal days. I know you used to sell property in Scottsville to fund your tuition. Take me back then to your studies and what ultimately you felt you were going to do.
I think just going back in time, I did a junior degree at Forte of Law and had bit of student loans with Standard Bank. And sometimes we need challenges to be able to rise above. And for me, I think it was a great opportunity to get good loans, but then the bank wanted me to go back and work to pay back the loans. And obviously I wanted to still advance myself and get to be a full professional. And when I decided, and I had brilliant marks on my junior degree, so I got admitted in Natal to do my LLB post-degree. But I was under this pressure to pay the student loans.
So you had to think of something entrepreneurial right then and there.
Exactly.
To fund your studies.
Absolutely. So I registered with a local agent, Reality Elk at the time. I wrote a board exam, as the agency board exam, and I started selling homes on Sundays. But in fact, what tended to happen is because the buyer would be turned off by something that they didn't like in a house, I would then come with different samples of tiles and paint colors and that sort of thing, and show potential buyers how it could look, the color of the house, or color of the roof, or color of the bathroom, or kitchen tops, and that sort of thing.
Did you enjoy the creativity?
I enjoyed that. I must say, it helped me that I grew up in a background where we used to sell bricks to builders.
And your grandfather was a brickmaker.
Yeah, exactly. So I'll be delivering bricks on site. I learned building, carpentry, plastering, and that sort of thing. And I took interest to carpentry. I actually built some counters when I was a youngster back in time. So in Scottsville, I ended up, because of disappointment, the builders that would do the renovation work, I ended up doing a lot of renovation work myself, which actually was a blessing in disguise because I made good money out of it.
But then you decided to go and work as a full-time lawyer in the commercial property space, or commercial law space rather.
Yes.
Why did you decide to step out of the property game? You could have continued and built your property empire right from the beginning.
Yeah, thanks. I think what was quite important is that I wanted to be a professional first, and I wanted to go through my articles. I know a lot of guys after a degree, after LLB for instance, some of my acquaintances went on to work for Standard Bank and they earned huge salaries. I remember in some instances they're earning 12,000, 15,000 Rand. I did my articles, I was earning 600 Rand in Cape Town with a law firm. But it was about long-term vision as against short-term. And I completed my articles and became an attorney of the High Court. And then I moved to one of my clients, Eskom.
And I'm interested in this. You spent, what, 6-7 years at Eskom?
Yeah.
Tell me a little bit about that phase. I mean, here you go into a parastatal. This is very different from the entrepreneurial environment that you'd created for yourself at university.
Yeah.
Was it difficult to spend time at Eskom?
That was an amazing environment for me. In fact, it gave me so much grounding, that's an experience and exposure in terms of governance, in terms of, I specialize in finance. I did my master's in law at Rao at the time, part-timely. In international finance. I really just took interest in finance. I did a conversion course at UCT while I was busy with my articles as well, just to familiarize myself with financial management, accounting, and that sort of thing, because that was the element that was lacking in me, and I knew I'll need it in life, especially in business.
But you were hungry for continued learning, for knowledge.
Yeah.
Has that abated now? Did it come to an end sometime?
Not really.
You still study?
I think you learn until you die. But in the natural, I think you get to a level like this where you can't be in formal studying, but you just read whatever you can read to familiarize yourself from an economic perspective specifically. I advised the Treasury at Eskom, and I got involved in quite a lot of transactions. Then I did more tax-structured transactions, cross-border lease transactions. I did the first Euro-Rand cross-currency bond, which I listed in Luxembourg single-handedly for Eskom back in '98 when the euro was launched. So there's quite a lot that I really got exposed to.
What then, after 7 years, kind of said, hang on a minute, there's something else out there for me?
I think challenges are a necessary part of our lives. Without challenge, you never rise. And I think for me, when I started Eskom, I had a bit of trucking business, which didn't go so well. And I owed some money to Standard Bank at the time, and I had to pay it back. So when I went to a job in Eskom, I had a bit of an issue there, and my job could never possibly pay for it.
So it was financial pressure that pushed you into something else?
Absolutely. So, I mean, with the consent of my employer at the time, I bought plots, and I would develop a single home nearby my work environment, which was Kalame Estate at the time. I ended up doing the whole street from between 96 to about 98. And for me, that was quite something. I think in 98, when Crystals hiked the rates to 26%, that was when I put some brakes on it. But then I also was quite fortunate, because then I had accumulated good capital. I was able to buy a lot of developers there who went into trouble.
You have made the statement that you can only create wealth in the property development game if you build from scratch.
Yeah.
For that wealth creation phase, you really need to start from the ground up.
Absolutely.
Does that still hold true?
I think that's very true. And if you really want to create wealth, I mean, you can be a professional manager, you can create good wealth out of managing an existing fund and that sort of thing. And generally, people who get into listed space and run funds successfully come from corporate finance background and that sort of thing, not necessarily property space, quite interestingly. But yeah, I think that really, for me, resonates with how to create a sustainable business going forward, because when that business grows and becomes a large business, you're able to relate to every aspect of that business because you built it from scratch, from the baby.
1998, you mentioned the period, and that was when you founded the Billion Group.
Yes.
Now, tell me a little bit about Billion and what your vision was from the outset. And obviously, we'll go to the listing then of Rebosis Property Fund come 2010.
I'd been developing single homes, and I really got to a point where I realized I've got to consolidate all of this into one home. And that's really the vision of Billion when it was born. I was busy with cluster developments in Hyde Park and in Bryanston and those places. And then I consolidated everything into one company. And from there, we really grew strength to strength. I had, quite interestingly, a vision of getting into other industries. So we got into coal mining business. It was a listed fund, Century Carbon, which was suspended from trading, and the guys came to me. And with a bit of corporate and structured finance background, I then assisted the guys to delist the company, did a 311, and I recapitalized the company with a few banks. But they had more fundamental issues, really, because it didn't last long thereafter. And we had to sell off the assets and pay back the debt and that sort of thing. But I learned my lessons, and way down the line, I said, look, I've got to focus on what I know best instead of diversifying and looking at other industries at the time. So I focused in property, and I think we went back solely into property around 2002. And by then I was looking at commercial property in the CBDs when the insurance companies and the banks were moving out of CBDs. So I bought quite a lot of properties in downtown.
But you needed that focus
to
consolidate the group.
Yes.
Do you think you would have failed had you not attained that focus?
Absolutely. I think to be diversified, you need a capital base, and you need to have built up some significant balance sheet and wealth, such that if you do lose money, it's something that doesn't impact on your overall success. And I wasn't at that level.
Were there some touch and go moments in this period where, for instance, I chat to a lot of entrepreneurs who have been successful, but they went through periods where they couldn't pay salaries. And they had to make a plan very quickly come the end of the month. Have you experienced those kind of challenges?
Well, that's the nature of entrepreneurship, and sometimes you'd have a moment where you are 3 days before month end when you have to sign the check for the salaries, and you just don't have it, and you don't know where it's going to come from.
And where does it come from? At the end of the day, everyone seems to always make it. Where does the money come from?
Sometimes you look back in life in some situations, and I think what happens is that in life, because you go through so many challenges, in order to stay positive, your mind develops the ability to block negative things. Because if they were to come up every time you have a crisis, you'd never proceed, you'd never do anything, because your mind would just be negative. And I think that ability to just close out on something that's negative is actually incredible. And I've met a few entrepreneurs, and I think they operate on a similar basis. And because I used to think I'm strange, because I would go through something and you don't even know how you went through it, but you know it was traumatic.
And you don't let it get you down.
Absolutely. So I had those moments. I had those moments when I...
Did you borrow money from friends, family? just in terms of, and perhaps this is taking some advice for other entrepreneurs right now who it's the end of the month are battling to pay their employees.
Yeah, so I can relate on specific situations. So back in when I lost mine in the coal mine, I think it almost sunk my property business. In fact, it did sink it in a way. I was left with one plot, and I just couldn't carry on. I retrenched, and I had few people in my office and ran back at the time. And I borrowed from Peter to pay Paul. And it's that kind of juggling and hustling the banks for a little overdraft. Back in time, we used to have a branch manager deciding on the overdraft and that sort of thing.
But so the key to stay positive over that period.
Absolutely. I mean, I remember back 2002, there was a time I couldn't even pay school fees for my kids at school. There was a period of 6 months. I don't know how I survived. And I kept looking back, trying to recall the memories. I just couldn't imagine how I could have survived. But I did survive.
Of course you did. 2010, listing
Yes.
of Rebosis Property Fund.
Yes. So just before the 2010, I had the privilege of really being able to develop one of the largest retail centers in the country, Hemingway's Mall. Prior to that, I developed Mdantsane City in Mdantsane when it was not fashionable to develop township malls at the time.
Hemingway's is now one of the 20th biggest
one of the
malls
top 20
in South Africa,
Yeah,
one of the
yeah.
top 20.
So I consolidated that together with some of the properties I'd acquired back in time on the CBDs, pretty much Pretoria CBD, and consolidated that to a portfolio of about 3.6 billion and put those in 2010 into Rebosis as a company. I then listed that company in 2011 in May, and it was the largest IPO in the property space at the time, and well oversubscribed when we listed the company. As I say, it was about 3.6 billion. Since then,
Black owned, black managed.
yeah, it was the first.
That was your differentiator.
Yeah, it really was the first. But the way we run business, it's business as normal. It was nice to just have that as a tag. But we've since grown this fund. From 3.6 billion in 2011 to about 18 billion currently. So it's really been something else that really has been quite an amazing journey. Listed space is very different to a private space.
A lot of scrutiny
A lot
in
of
the listed
scrutiny,
environment.
and also transparency is very important. The more transparent you are with the way you run the business and the key metrics that you report on, very important. And it's something that in the private space there's certain key metrics that you don't even worry about, that you're not even aware that you need to monitor.
Has it been arduous being listed?
Very arduous and very demanding in terms of getting the perception right, because listed space is more about perception, and you always have competitors who want to dilute that perception in the market. I don't know whether
You've had
it's the
some
same in the other
negativity in
industries.
the media also.
Yeah.
You've had negativity and potentially fueled by those competitors, as you've been on record as saying.
Yeah.
People who don't like the fact that you may get a deal and they don't, and come in and say that it's because of your political connections. But
Yeah.
you, again, I think you've come across as though it's water off a duck's back. You're not going to be brought down by the negative comments. Are they over?
Yeah, every time we had anything negative, really, I think my focus has always been to just show the positive that we do and just not be distracted by, those sort of things can distract you to the point where it actually takes your eyes off the ball. And that's quite important. Whenever you get anything negative, the most important thing is really just to continue to emphasize what's good about what you do.
Are you politically connected?
I've said this over and over again, there is no need for political connection whatsoever. In fact, political connection can just cause you trouble. You don't need politics to run business. Excel in what you do as best as you can and look for talent and for people who are sometimes brighter than you, who will assist you in what you do, and just keep focusing in what you do. The result will show.
The transaction that I alluded to earlier, and again, it is a related party transaction, given you're the sole shareholder of Billion Group.
Yes.
And then obviously you're a major shareholder in Rebosis. Basically, if I understand it correctly, Rebosis Property Fund bought the property management company and the property asset management company from Billion Group.
Yes.
And then also the two malls, one in the Eastern Cape and one in Centurion.
Yes.
Done deal. Pressure from shareholders abated because you revised the prices on the deal. Is it all done?
Rebosis, as an income fund, didn't take and doesn't take development risk. So the agreement and the understanding we had always was that Billion continues, when we listed Rebosis, Billion will continue as a developer, and Rebosis will be an income fund focused on income play. So existing assets that produce income, and investors invest based on yields on those on that income. So that continued. So the last 5 years we did phenomenally well with Rebosis, from both income distribution, we've never disappointed shareholders, and also from an NAV growth perspective, it's grown very nicely. From a Billion perspective, we've developed large retail properties in this country, much to the envy of the sector, because these are really prime assets. If you take Bay West and P, 90,000 square meter GLA, squarely within the top 10 shopping centers in this country. Most certainly the most modern shopping center this country has ever witnessed, and will continue to witness going forward. Forest Hill in Centurion, family-oriented type center, large regional center with Olympic ice rinks, wave pools, games arcades, and a whole range of things. So we find, for instance, dwell time above 2 hours to 3 hours, and so on. So without being carried over there, because that's my passion in terms of developing these assets. The challenge is that Rebosis is trading at a yield which is quite high, and these assets come at a very low yield because they're expensive assets by their nature, because they're retail, big regional retail assets. So what
shareholders thought that the whole deal would be dilutive.
Yes, initially it was 20% dilutive. So by taking Umtata out, that dilution came down, and then with the revision of the pricing, we made the deal effectively neutral. Which really, so
better pricing and a better yield at the end of the day.
Absolutely. So what we did was to also defer part of the equity that we'll receive into year 2 and year 3, which just made it easy for the transaction to not have a dilution impact for shareholders. So effectively they get these brilliant assets for at a neutral level. Effectively at the fund.
And we're now sitting with Rebosis Property Fund with assets under management to 18.6 billion.
Yes.
So you're now the South African Property Index, you are firmly in that space.
Absolutely.
The growth from here, where do we go, Sisa?
So, the reality is, so we still have to consummate this transaction. So it's been going through the JSE secular approval process. So we had the final secular approvals, and we're now consummating transactions.
So you don't foresee any problems?
We already have shareholder support, about 70% of our shareholders, for the transaction to be voted in favour. But the voting only takes place end of September.
The UK assets,
yes.
Have those hurt you post-Brexit within the Rebosis Property Fund?
So we've got about 20% exposure into the UK. We've got 3 shopping centres there through New Frontier. We invested in that fund sometime about 18 months ago. It's been doing very well. It's achieved phenomenal growth. We invested initially at a 7% yield. They acquired a Blackpool Centre thereafter. The yield improved to about 7.6%. So it's been, in an economy where there's good economic growth, there's 5th largest economy in the world, etc. Because there's no inflation, and you don't have escalations on the income, and generally you don't find growth from a distribution perspective. But we've grown 10% in distributions in New Frontier. So it's been quite phenomenal. We increased our shareholding from 62% initially. We're now 67% of that fund. It's listed on the ALTEX, as you know, and they're looking at migrating that fund into
And you
the main
haven't
board.
seen an adverse impact from Brexit?
There's been no adverse impact. So we had some transactions, and we said, no, let's pen these transactions until Brexit happens. Now, as you know, there was a 70% chance that it's going to happen. Sorry, it won't happen.
It won't happen.
Yeah.
The whole market, everybody thought it wasn't going to happen.
Yeah, and now suddenly it happened. Quite in hindsight, we looked and we said we actually made the right call not to have exercised that, because we could have acquired those properties in December last year. However, we were concerned that valuations would be impacted and that sort of thing. They've just had the recent valuations. There's really been no impact so far. Again, it's just the quality of underlying properties that they invested in, which are dominant regional shopping centres in the secondary towns where there's no competition effectively.
Talk to me about the team that surrounds you, the team that works with you. What kind of people do you look for?
So effectively, my philosophy is very simple. I love passion, I love the drive, I love people who love challenge. I'd rather choose that before experience, to be quite honest, because I can teach people experience. We've got tools in-house to teach people experience and to use them into our own work environment. I love young talent, because
I was going to say that does skew very much to the youth with no experience.
Yeah. because you can change attitudes and you can shape people in your way of thinking, which is quite important. And I mean, we've had some people who've been around with us 10 years and over 10 years and that sort of thing. And they gel with us. They know how I think and how the team thinks. And, so it's quite important too, because we've had people coming with experience, but you realize you can't change them anymore. The way they've been brought up to do things, that's just how it is. And coming to a different environment, they get caught up in and they get frustrated sometimes.
So another, probably a follow-on question to that is, how do you retain young people when you've got energy and passion and drive? And I'm sure you also look for some entrepreneurial flair.
Yes.
Generally, those people are hungry to
stay.
go out on their own and they won't stay. Is that a problem you encounter?
Look, we've had that. It used to upset me a lot. But I came to realize that for me, it's also part of giving back. I've seen a lot of successful business people or entrepreneurs who came out of our own, and they're still grateful to this day. They still consult with me, and it's been quite an incredible journey because you look back and you're like, at least I gave something,
What's been the hardest lesson that you have learned to this point?
That's a tough question.
It is rather a tough question.
Yeah, I have to assimilate of all my challenges, which one's been the toughest. I think in the listed space, for me, the toughest thing is just dealing with perception when everyone else who doesn't like your success finds a reason to go and talk you down and bedevil you and just, poke holes in everything that you do.
Did you get angry initially?
It used to make me very angry. But over time, you just realize this is just how things are in this listed space. Things are based on perceptions, not reality. You can talk about the quality of your underlying, you can talk about the quality of your team, you can talk about your historical performance, you can talk all the good things that you think really an investor, it's very important for an investor. But perceptions you have to deal with, you can't ignore them.
Is it worth being listed? I mean, obviously you can raise capital easily and grow a company, but that visibility, in hindsight, I know hindsight is a perfect science, but if you could do it again, would you have listed Rebosis Property Fund back in 2010?
I probably would. I think there comes a time in anyone's life and in every business cycle where in order to grow, if you're not hungry for growth and if you're not entrepreneurial, looking for new opportunities all the time, perhaps it's okay to stay private, and it's also a balance because then your life is not into public scrutiny and that sort of thing. But if you're hungry for growth and you're somebody who's driven and you want to achieve a lot in life, I think you do grow to a point and your business grows to a point where you do have to face that sort of thing because really access to capital in the listed space is enormous, and you can't, in a private space, you just can't achieve the same scales.
So you made the point that at one stage one of the biggest challenges was that you couldn't pay school fees for 6 months. Now, as a parent, and that's devastating.
Yeah.
Tell me a little bit about your family.
So I mean, I was married. I divorced about 6 years ago. My kids live with me. I've got my boy who's 18 years now. He's a racing driver. He's based in the UK. He races on the British Formula 3. So it's really been quite something for me, and I find myself having to go to the UK all the time because of that. I just came back with them, and my girl is 15 years. But yeah, so back in time, those things, you look back in history and you realize how worth it the journey is sometimes, having gone through all of this, and you look at what has become of them over time. And I think
you've invested well. You do a lot of CSI, blankets, shoes for children, etc.
I have a passion for schools.
For schools, education has to be the lifeblood of any economy going forward.
Yeah.
If you were made president of South Africa tomorrow, I make you president of South Africa tomorrow, what would you do?
Oh, wow,
if I said to you, there are 3 things that you could do, and you were made president, what would those be?
That's very interesting. I have no ambition of that, but I think for me, what's most important, first of all, is education. The South African economy relies heavily on big institutional type economy, which is largely anti-competitive. It is not conducive for young, small entrepreneurs who actually, if you look at most successful economies in the world, those are the kind of businesses that create more jobs. Those are the kind of businesses that are more innovative. Those are the kind of businesses that actually drive the economy.
So these are small, medium businesses. You would basically come out strongly in favor of enabling small businesses.
Invest in a lot of innovation, technology, and that sort of thing, because they're driven, they're hungry, and you need to have incubation funds to actually encourage that and spur that in the economy.
You've got one last thing that you can do.
Yeah, and
Mr.
obviously
President.
the labor market is very important in that. As a leader, you're the father or the mother of the nation. And you need to embrace everybody and make everybody feel important, feel part of that nation. Make them proud for being part of that nation. Get to their creativity and get people with skills and those without skills to work together and really create an amazing nation, and one of the best the world has ever seen. I think that's really foundational.
It all begins with good leadership.
Yeah, absolutely.
Sisa, it's been an absolute pleasure. Thank you very much for your time.
Pleasure, brother.
I've been chatting to Sisa Ngebulana, who's CEO of Rebosis Property Fund. He is also founder of the Billion Group and chairman of the Billion Group. You're watching Captains of Industry here on CNBC Africa, DSTV 410.